Good afternoon from the floor of the CME. This is Chris Robinson with your Traders Exclusive comment for today, Thursday, April 26th. We've got just a few business days left in this month. And what are we looking at specifically in the soft commodities? Corn, wheat, beans, also cotton. Pretty interesting cotton chart. Pull a cotton chart up and see it's kind of a China bet as well. It's been on a very nice, steady climb higher near contract highs. 80 cents for new crop cotton is a very big number. Exports have been very good, and despite the fact that the Chinese put trade tariffs on other commodities coming out of the U.S., specifically like sorghum and DDGs, these types of things, they've left cotton alone. This is cool because China is the biggest producer and the biggest end user of cotton. And to have the cotton market here in the U.S. hold up is a pretty good sign. Now, what's the focus there? In a week or two, supposedly, the Treasury Secretary is going to go talk face-to-face with the Chinese. There's a perfect setup there for some sort of reaction. And since we're near contract highs, you know, it's either we're going to extend to new highs, or we'll get a follow-through higher, or the setup is there for a correction. So if any sort of bad news, we could have a fallback. So take a look at the cotton chart. Cotton, historically, you know, the nickname for it is the widowmaker. But when the market gets in situations like this, it's giving you opportunity. And if you've been watching me on these recordings, you can always tell that's what I'm looking for. I'm looking for good opportunity. Secondly, let's switch and take a look at the cattle market. After a pretty horrendous sell-off, both the fat cattle and feeder cattle had a great rally back. Feeder cattle recovered about half of its loss. Fat cattle recovered almost half, not quite half. And now we're set up for the next 2 or 3 weeks. The number one driver has been not supply and demand, it's been money flow. And if the managed money steps in and reloads on the long side, that could be supportive for cattle down the road. Vice versa, if they decide to once again wash their hands of it, we could have another leg down here after having a good correction. So that's an opportunity I'd look at. And then finally, we're into the time of the year where corn, wheat, and beans, we're looking at the weather forecast. That can be a very dicey play. Last week I talked about looking at Kansas City hard red wheat. We had a pretty good bounce there, but then a lot of volatility. All I can say is if you're going to trade grains, make sure that you have very tight stops. By that I mean, if you're selling it, make sure you have a top buy stop. If you're buying it, you make sure you want to have a sell stop out on the market so that if we go to bed one night and we're 15, 20 cents lower, you're not sitting there with a bad position on wishing you were out. So that's about it for this week. This is Chris Robinson. If you're looking for help with your trading or your hedging, look me up online. Chris Robinson. Have a great day.